Welcome students to another lecture in the series. Let us continue with the topics that we started in the last lecture. As we started with the types of budgets in the last lecture, if you remember, we studied in total 11 types of functional budgets, or you can say the components of master budget, of which we studied three, that is sales budget, production budget, and production cost budget. And now the fourth one we are about to study, that is your raw materials budget. As the name is suggesting, this budget shows the estimated quantities of all the raw materials and the components needed for the production demanded by the production budget. Raw material budget serves few basic functions, of which I have mentioned few. That it assists purchasing department in planning the purchases. It helps in the preparation of purchase budget, and it provides the data for the raw material control. Means in all, it looks after the whole of your purchase department and helps to facilitate the production department in carrying on their production in a smooth manner. It should be noted that raw material budget generally deals with only direct materials and not indirect materials. Indirect materials and supplies are included in other forms of budgets that we call as overhead cost budget. Okay. Then the next budget that we have is purchase budget. Under this, we perform careful planning of purchases, which offers one of the most important areas of cost saving, because profit maximization and reduction of cost are the two major objectives at this point. So the purchase manager should be assigned the direct responsibility for preparing the detailed plan for purchases for the budget period, and he's supposed to submit the plan in the form of purchase budget. The purchase budget actually helps you, it gives you the details and the idea about the purchases which are being planned to be made during the period to meet the needs of the business. And it indicates certain things, like it shows you the quantities of each type of raw material and the other items to be purchased. It shows the timing of purchases. It shows the estimated cost of material purchases that we have estimated on like behalf of the past records that we have. There are certain factors that we need to consider while preparing a purchase budget. Let us see some of them. The opening and closing stocks to be maintained, as it will affect the material requirements, means that somewhere or other we cannot hinder the working of the production department. So for that purpose, the requisite opening and closing stocks should be maintained. Then maximum and minimum level of stock quantities that are supposed to be there in our store. Economic order quantities, EOQ, you have studied that well in your cost accounting, that in one go, that how many or the number of units to be ordered in one go economically. The most economic order quantity needs to be decided and needs to be followed. Then final resources which are available with us, financial resources which we can invest and can keep them stuck in uh, the purchase department. Then purchase orders placed before the budget period against which supplies will be received during the period under consideration. Then last factor that we need to consider here is the policy of the management regarding the materials and components that are supposed to be manufactured within the business as distinct from those purchased from outside. Now the basic reasons, or you can say functions, of preparing a purchase budget can also be discussed at this point. So for that purpose I have mentioned few. It enables the purchasing department to plan its purchases and enter into long-term contracts wherever there are advantageous situations available to the purchase department, to record the material prices on which the plan represented by the budget is based. It further helps to facilitate the management of finance of the business, because it can define the cash requirements in respect of the budget period and for shorter runs as well. So the purchase budget differs from raw material budget, because sometimes students mingle these two. But purchase budget is different from raw material budget in the context that budget specifies both quantities as well as costs, whereas raw material budget is usually limited to quantities only. Basically, both are serving the same purpose, but purchase budget is having a wider scope because it also covers the costs. Secondly, purchase budget includes the direct and indirect material, both, and sometimes finished goods for resale also, and some services like electricity and gas, etc. While raw material budget only deals with the direct material requirements. Let us have a look to a numerical how to draw a purchase budget. Here in this question, you are given with the conditions. Let us see. The sales manager of Mahindra and Company reports that next year the person expects to sell 50,000 units of a certain product. Let us see the other conditions given. The production manager consults the storekeeper and casts his figures like two kinds of raw materials are there, A and B, and they are required for manufacturing the product. And each unit of the product requires 2 kg of product A and 2 kg of product B to produce 1 unit. The estimated opening balances at the commencement of the year are also given to you. Finished goods are also given, 10,000 units, and the opening stocks of A as 12,000 kg and B as 15,000 kg. The desirable closing balances at the end of the year are also given to us, that is finished products 14,000 units, for raw material A 13,000 kg, and for raw material B 16,000 kg. So we need to draw up the materials purchase budget for the next year on the basis of the information given here. Let us start. First of all, we need to estimate the production quantity during the year, because that is not given to us. So let us estimate the whole like production during the year, for which we will consider the sales that are given as 50,000 units. We will add the desired stock at the end of the year, that is 14,000 units, and subtract the expected stock at the beginning of the year, that is 10,000 units, and we are able to obtain the estimated production during the year, that is coming out as 54,000 units. Then let us draw the purchase budget, for which we will begin with the consumption of raw material. If we see 54,000 units at the rate rupees 2 per kg for material A, the price is this. For 54,000 units, why? Because this is the estimated production. At the rate rupees 3 per kg for material B, 1,60,000. Desired stocks are also given to us for both of these. We can desired stocks at the end of the year. We can add that closing stock and we can subtract the opening stock, means the expected stock at the commencement of the year. So in that case, we are able to obtain the quantities of materials to be purchased during the year. Then labor budget. Labor budget is classified into direct and indirect, two parts. Some companies prepare labor budget that includes both direct and indirect labor collectively, while some companies use only direct labor cost and include indirect labor cost in your overhead cost budget. That depends on the policies. The labor budget represents the forecast of labor requirements to meet the demands of the company during the budget period, and this budget must be linked with production budget and production cost budget. The method of preparing labor budget is easy. Let us see that. The standard direct labor hours for each grade of labor is required for each unit of output, and the standard wage rate for each grade of labor are ascertained, and then they are simply multiplied. Multiplication of units of finished goods to be produced by the labor cost per unit gives the direct labor cost. Indirect labor cost is normally fixed, so it is easy to calculate for the period. Now the basic function or the purpose of preparing labor budget: to estimate the labor cost of production. It is an important cost. Then to determine the direct labor required in terms of labor hours and the number of the workers and the grade of these workers required to meet the production requirements, that how many workers we need of which grade, to provide the personnel department with the requirements so that it may plan the recruitment activities accordingly, to provide data for the determination of cash requirements for the payment of wages, that how much cash we will be needing, then to provide data for managerial control of labor costs is also a basic purpose. The next in this, we have production overhead budget. See, after budgeting of material and labor, the next logical step comes out for production overheads. The production overhead budget represents the forecast of all the production overheads. It may be fixed, variable, or semi-variable, which are supposed to be incurred during the whole budget period. That budget period can be of a month, a week, a year, or a quarter, and in general it is of a year, because we forecast for a year in general. The fact that overheads include many dissimilar types of expenses, it creates considerable problems, like We have the allocation of production overheads to products manufactured, and control of production overheads. These are the two problems we have. So production overhead budget basically involves the preparation of your overhead budgets for each department of the factory, as it is desirable to have estimates of manufacturing overheads which are prepared by those individuals who have the responsibility for incurring them. So the budget expenses for each sub-period during the budget period should be indicated, and the classification of expenses should be the same as used by the accounting department. The budgeted overhead costs of service departments are then totaled and apportioned to the production departments according to the service, which is services which is received by each of the production department. The budgeted overhead costs of service departments are then totaled and apportioned to production departments according to the services received by each such production department. If you remember, the same was taught to you in cost accounting. The factors that we consider here, which are important at this point, are the classification of all overhead costs into fixed and variable elements. So in the case of semi-variable items, the degree of variability is also needed to be ascertained. The level of output at which the fixed costs change is also determined. The level of activity likely to be achieved during the budget period, like units of output, labor hours, etc., are also needed to be determined. The next important step is the policy of management regarding the matters like overtime, number of shifts to be worked, depreciation, replacement of hand labor by machines, etc. It depends on the top management. Then individual items of cost incurred in the past are also very important. The next budget that we have to study is selling and distribution cost budget. Here the name is suggesting you that what we are about to do in this budget. This is actually closely related to the sales budget, and it represents the forecast of all the costs which are incurred in selling and distribution of the company's products during the whole budget period. And as a general rule, if we see, the sales budget and the selling and distribution cost budgets are prepared simultaneously, since each has a definite impact on other. So the sales manager is responsible for preparing the selling and distribution cost budget. He prepares this budget with the help of heads of subdivisions of sales department, and some companies sometimes prepare a separate budget under with the different headings like advertisement budget, which would show particularly that how much spendings are there on advertisement, because there we have heavy spendings in general. Then we have administration cost budget. This basically represents all the administration expenses like director's fee, managing director's salary, office lighting, heating, air conditioning, all the administration expenses. And most of the expenses are fixed, so it is not difficult to forecast. Then we have capital expenditure budget. This budget represents the expenditure on all fixed assets during the whole budget period. It includes the items like new buildings, machinery, land, intangible items like patents. Here we have certain features that we need to study. The capital expenditure budget has certain characteristics which distinguish it from the other functional budgets. How is it different from others? First, that capital expenditure budget deals with the items not directly related to P&L account. Expenses related to capital structure like depreciation, repairs, maintenance, etc. however, correlated to this budget, and they are included in overhead budgets. Capital expenditure is frequently planned a number of years in advance, perhaps 5 to 10 years, in which case it is broken down into convenient periods like years or months. As compared to this, other functional budgets are normally prepared for a shorter uh, period, maybe like 1 year. This budget involves large amount of expenditure which needs top management approval, uh, because the investments are heavy. So the capital expenditure budget therefore is subject to certain strict management control. So we are ending this here only. We are left with few more budgets to be studied that we will be studying in the next lecture. Till then, study well. If you have any doubts, you may write to me. Thank you.